Before we begin, a quick but important disclaimer. The strategies we'll discuss are for educational purposes only and shouldn't be taken as personalized financial advice. Everyone's financial situation is unique, so what works for one person might not be right for another. Investing always carries risk, including the potential loss of your initial investment. We strongly encourage you to conduct your own thorough research and consider speaking with a licensed financial advisor who can tailor a plan specifically for your goals. And if you find this content valuable, please take a moment to support the channel. Liking, subscribing, and hitting that notification bell helps us reach more people just like you. Don't forget to share this video and check the links in the description for additional resources we've put together for you. So you've got $1,000 ready to go, and you're asking that powerful question: what's the smartest way to invest it in the stock market right now? It's a fantastic starting point, but it can also feel overwhelming with so many options out there. Well, today I'm breaking down exactly how to turn that $1,000 into the foundation of long-term wealth. We're going to demystify the process and give you a clear, actionable roadmap, even if you're brand new to investing and have never bought a stock before. This isn't about getting rich quick. It's about building a solid financial future, one smart decision at a time. Let's get started. Before you buy anything, ask yourself one simple question. What do I want this money to do for me? Are you building long-term wealth, saving for retirement, trying to grow money you won't touch for at least 5 years? If your timeline is long-term, the stock market is historically one of the best places to grow your money. Now that you have your $1,000 ready, the goal is to achieve smart diversification without getting bogged down in complexity. You don't need to pick individual stocks or become a Wall Street guru. Instead, we'll use a simple, time-tested approach that successful investors have relied on for decades to build wealth steadily. Let's start with option A, the beginner's portfolio. You'll allocate 80% or $800 into a low-cost S&P 500 index fund. Think of tickers like VOO, SPY, or FXAIX. This gives you a piece of the 500 largest companies in the U.S. The remaining 20% or $200 goes into a total international index fund, such as VXUS or IXUS. This move is crucial. It diversifies you beyond American borders, giving you a stake in thousands of companies across both developed and emerging markets. All told, you own over 10,000 companies worldwide. But what if you want something even more hands-off? That brings us to option B, the one fund strategy. This is the peak of simplicity, and it's incredibly effective. You put the entire $1,000 into a single total stock market ETF like VTI or SCHB. With one click, you're invested in the entire U.S. stock market, large, mid, and small cap companies. It's the ultimate set it and forget it approach. Both of these strategies are built on the same powerful principle. Instead of betting on a few companies, you're betting on the long-term growth of the entire market. This isn't about getting rich overnight. It's about letting the power of broad market exposure and compound growth work for you over time. By keeping it simple, you avoid the common pitfalls of overtrading and emotional decision-making, setting a solid foundation for your financial future. Your $1,000 is your seed, but the real wealth comes from adding consistently and set up automatic contributions, even $25 or $50 a week. It's small now, but over time, consistency beats timing every time. You don't need to save up $400 to buy a share of Tesla or $500 for Amazon. Brokerages like Fidelity, Schwab, and ROBINHOOD let you buy fractional shares so your $1,000 can be spread exactly how you want. Enjoying this? Tap like, subscribe, turn on notifications, and share it with a friend. Helpful links are in the description. Don't blow your whole $1,000 on high-risk penny stocks, meme stocks, options trading. Hot tips from social media. You're building wealth, not gambling. Here's the truth. The biggest gains in the stock market go to the people who stay invested the longest, not the people who pick the hottest stock. If you leave your money alone and keep adding to it, compound growth starts working for you. So, to recap, if you're starting with $1,000 today, the path to building wealth isn't about finding a secret stock. It's about focusing on 3 core principles. First, a simple, diversified portfolio. This spreads your risk and captures growth across the market, protecting you from the dramatic ups and downs of any single investment. Second, consistent contributions. Adding to your investments regularly, even small amounts, harnesses the power of dollar cost averaging and keeps your momentum going. And third, a long-term mindset. True wealth is built over years, not days. Patience is your greatest asset. That's how you build wealth, not overnight, but for life. If you want me to create a script for reinvesting $1,000 every month, or a version focused on dividend investing, ETFs only, or high growth strategies, just let me know in the comments. Thanks for watching. Like, subscribe, hit the bell, and share this video. Explore the links below for next steps. Let's run real numbers, $1,000 today plus $100 every month. Each month, your money earns returns. Those returns stay invested. So next month, you're earning on a bigger base. We'll use 2 long-term examples, the 7% per year, conservative, 10% more aggressive. At 7% a year, compounded monthly, here's a rough idea. After 5 years, around $8,500. After 10 years, around $19,000. After 20 years, roughly $56,000. That's with $1,000 up front, then $100 every month. Estimates not guaranteed. Fees and taxes ignored. If the average ends up closer to 10%, after 10 years, about $23,000. After 20 years, about $83,000. Estimates, not investment advice. That's compounding. Your initial $1,000 grows, and your $100 each month snowballs. Remember, markets vary year to year. These are examples, not promises. Stay consistent. Think long run. Want a step-by-step plan for your timeline and risk? Comment below. Before you go, a quick invitation. Grab the Kindle book, Get Rich by Investing by Craig Smith, a CEO of the CRAIGTRADER companies and a longtime experienced investor with a finance degree. This book can help any level of investor become better and more professional. The link to get it is the first link in the description. Thanks for your support.